Hello everyone, welcome to our final episode, our training called Uncensored VC. I'm Alberto Chan, the co-founder here at RaiseHealth. Today we're going to be talking about valuation and closing, navigating term sheets, handling VC objections. All right, we are ready. So the most important thing here I'm going to share is what we call the valuation trap. When we're negotiating, there's obviously an inherent kind of benefit for you to inflate your valuation so that you can lose less equity in this round as early, and so you can keep ballooning your valuation in the other rounds. But here's what's really happening. Most of startups are not being able to deliver what they promised. And so the investors are not realizing their gains. And what is happening a lot in the industry right now is what we call recaps. Essentially is you need to buy the previous investors out, reduce your valuation so that you can raise and get more of the capital you need to keep moving your company forward, right? So optimizing for the highest valuation, sometimes I would say it's a trap. In a way, if you start setting unrealistic bars for your next milestones, it's almost like saying you're gonna come out of the door once you go to market with like $5 million for year one revenue, and you're a completely new workflow. That doesn't happen. So make sure you understand what is this valuation trap, and not every time maximizing for the highest valuation, it's to your benefit. But getting the investor that really understands what are going to be the challenges and really being with you throughout that journey, being able to, like we said in previous episodes, write that bridge round check and help you with the other investors, right? So then the reality check is a few times startups will hear like your valuation is a bit high, we just can't make the model to pencil out. The translation is your timeline has been too long. If we give you this price, we won't build enough value before we are able to raise again. And then our shares will get heavily diluted. So you also miss the internal rate of return that the fund really requires to be able to raise fund too. You have to remember that the investor doesn't put money in and then wait 10 years for you to sell so that he can realize the gains and then raise a fund number 2 or fund number 3, right? He needs to play also that catch-22 game because he needs to make investments and he needs to say how great he's doing, because whenever he deploys the last piece of that current fund, he has to start already at fund number 2, at fund number 3. And so sometimes they have to have that flexibility to go out early, and sometimes they need to have more say in the game. And so you also have to really understand the reality of your investor to really understand whether this is going to be a long-term or a not so long partnership. So then the RaiseHealth app, you also have something that we call a deal desk analyst. In a way, what we believe is that valuation is not really arbitrary. Like you can go to Carta and say, all right, average companies are raising at my level to be like 3 to 5 million on seed to Series A with pre-money, post-money, right? But we really discourage to do that. Obviously use that to your benefit as a benchmark, but try to really understand how the ladder of multiplication and valuation is going to work. From your clinical to talking to FDA, your first in human, design freeze, right? And then allow yourself some sort of buffer. We usually tend to say that whatever you require capital, it's going to be the cost of your raise, right? Let's say you think to get to your next milestone from clinical to first in human is going to take you 5 million. And so that's your required capital. That's like your milestone cost. You need to raise 5 million. So multiply that by 1.2, which is 20% buffer, because things will happen and you don't want to keep chasing that extra dollar to cover your bridge round. So in a way, the deal desk analyst will also help you with that. So as you can see in the software, you can go into the left side where you RaiseHealth Copilot and tell Copilot to help you with if you have a term sheet, right? And so the deal desk will return back to you and help you think about what is the dilution impact, controls and governances, everything you have to understand so that you're better prepared to talk to your investor once you have that term sheet. Remember that the Do-Desk Analyst is still in beta version for do-it-yourself subscriptions, but if you're on Do-It-With-You subscriptions, you will also receive over your email what we call a valuation justification matrix. It's a piece of document, as you can see on the screen, that is going to help for you to be able to put in your data room that you have a third-party company looking at what is your valuation. In this case here, you can look at the company was looking at raise, and we give you ranges between 30 to 38 million. And so the valuation matrix will give you all the reasons behind why RaiseHealth believe that this is a fair valuation justification. So that ends this piece of the training. We have one more called investors relationship, but right now we're still leaving that in beta. We're not even releasing it for do-it-yourself subscriptions, just because that would allow you to actually move forward with 100% automated fundraise. So it will read the network analysis, propose content, personalized content, do the outreach, update your CRM, all those things. It's just that for this moment, we will not be releasing for do-it-yourself subscriptions. But for this episode, I hope that it makes sense that there's a reality check here about valuation, and we do need to put more time to realize who we're talking to, what's the game theory here. And here's where you have support from the RaiseHealth app and your Do-Desk Analyst. Remember, this is still in beta version, but that concludes our 5-series episode on the Uncensored VC. So I appreciate your time and attention. And if you have any questions, again, go to our LinkedIn community and post your question there. That will do our best to help you out. I appreciate it. Have a good one. Take care. Bye.